14th. And we have Brent crude oil trading at 64.74, just dropping off a little bit this morning in early Asian trade after the thumping soar yesterday with all energy markets, not all energy markets, all markets, all financial markets soaring into the skies because Paul Hicken's new favorite guy, Donald Trump, isn't going to end the world, at least not for another 90 days. Let's start off with James McCallum, the chairman of Exergy and the professor of energy at Strathclyde University. James, a simple question to start this morning. Who won the trade war, the US or China?
Look, China has undoubtedly maintained the most stable position, which is we're not coming to the party until you move, and Trump has clearly moved. That said, Sean, look, Trump's tactics are fairly straightforward here. He overshoots in terms of what he wants, and by a long way, with a real intent that he will wind right back to a completely different position. And in many ways, for me, it's not the position that China has taken which has been most interesting. It's the position which the Fed has taken, which is we'll sit on the fence and we'll wait and see, and we'll not move to make any further aggressive rate cuts until we actually see how the landscape actually looks. And to be honest with you, what we're seeing this week is that the markets, the world has come back towards the positions which China tended to take, and indeed the Fed have taken, so Jerome Powell. So the reality is waiting and see. Trump will move before we have to, is being borne out this week.
Let's welcome Malia Bengali, founder of MB Commodity Corner. Malia, it's certainly been a very noisy, turbulent month. As they say, we've all got, I think the phrase is Trump deranged syndrome, if not just the headache of him dominating all of our screens. But ultimately, has anything changed between April 2nd and today? We've driven the bus off the cliff of the edge of towers, but we now have sort of reversed with the two front wheels still over the cliff. Where are we at? What's changed? Except there's been a hell of a lot of noise, but ultimately we've put 145% on to China, US tariffs onto China. Now I reversed them. That's a victory. I mean, what is this?
You're right. Thank you, Sean. I mean, Trump's tactics are very extreme and harsh, but end of the day, let's see what he's promised.
But tactics mean there's a target. Like, where's the outcome?
The outcome is that now the US is going to be receiving higher tariffs from the rest of the world. Before, from 2.5%, they're now getting 10% minimum from a lot of countries. And from China, they're going to be getting 30%. So yes, it's not as high as 100%, but end of the day, the US is getting more money for fairer trade with the US. It's leveling the playing field. The question you can ask is this really equal, or is there much more to come? End of the day, I think what's happening behind the scenes is Trump's focus was to get more money to fix the US fiscal deficit problem, because that is a huge issue. We'll talk about that. Lower oil prices, lower dollar, and he's accomplished all those things in a matter of 3 months. The one thing that he's been sort of...
So this is over then?
Not really. I think the US bond market is pretty much the last thing, the nail of the coffin. And that's something Scott Bessent and Trump are very focused on. The US 10-year yield, the bond market is not very happy. We have $9 trillion of debt to issue, and now yields are still at 4.5% on the 10-year and 5% on the 30-year. So this is still a big issue for them. So the question now is, when they took back their Liberation Day announcement, I think the bond market was in turmoil. So they are quite sort of, taking hostage by the bond market. I think this is all by reckoning the fiscal debt situation, getting jobs back to America, but the bigger issues are unresolved in terms of how will the US debt fiscal expansion go here without printing more money. And going back to the Fed right now, they can't cut rates and the US needs lower rates. So yes, he's getting more money for the US, but the bigger picture has not changed in terms of the issues around the US economy.
Paul Hicken, chief economist and editor-in-chief at Petroleum Economist. Paul, in the month or the interim month of this journey that we've all been on, Brent crude oil on April 2nd was at $75 a barrel and fell off a cliff with the news, and is now still $10 below that level, even though we've had this recovery to 65 from under 60 in the last few days, with all of this sort of positive signaling between the trade war with China and the US at least having a pause, a timeout. Oil prices are at 65. Are they going to make the whole journey back to 75? Is this over? Should it make the journey back to 75? How do you read the intersection between this moment and oil prices, China, US sort of peace or timeout, and oil markets?
Yes, great, Sean. Well, first of all, I think the markets don't like these barriers, and that's going to weigh heavily on demand. That's still going to have an impact on demand. But I think we're now finding ourselves in a bit of a new normal of a $60-$70 range. I think with the fact that OPEC Plus is now bringing back barrels, I think in one sense the market overreacted to the amount of barrels that were coming back from OPEC Plus in the same time as you had this sort of weakening demand scenario, because let's face it, most of those barrels were already in the market. It was OPEC Plus acknowledging that a lot of those barrels were already there. The only people who are really keeping barrels off was Saudi Arabia. And they haven't quite come to the party in terms of bringing those barrels back just yet. They're slightly slowly increasing according to our figures, but it's probably going to be next month where you're going to see some more Saudi barrels coming back onto the market. And then that coincides with extra demand in the market anyway. You've got the Hajj, you've got crude summer burn in the Middle East, you've got summer driving seasons. There's going to be extra barrels in the market. That's going to be something that those barrels are going to be absorbed into when you get those sort of 400,000 barrels a day coming back. So in a sense, it's really about keeping those oil in that $60-$70 range. It appeases Donald Trump. I know some people don't think that that's in the thinking, but I think there is certainly something there to be said. It does send a message to the non-compliers where, if you think about it, to paraphrase Bruce Lee, this is the art of fighting without fighting. It's the art of a price war without a price war for Saudi Arabia. It can bring barrels back, send signals to the non-compliers, and then you've got this price. It starts to choke off shale and some of the non-OPEC supply. We talked about at the beginning of the year, most of the forecasts were 1.5 million barrels a day plus for non-OPEC supply. Is that realistically going to happen at $60-$70 barrel? I don't think so.
Well, let's ask James McCallum, because that's what he made his fortune on over many decades, drilling oil out of the ground. How quickly, James, do you think this price range, this instability and uncertainty starts to shut in new supply or abandon investment in new supply, and then actually result in closing existing supply?
Yeah, so it started already, Sean. I mean, it's not something which is ahead of us. It's happening already, and you're seeing that in the Permian Basin, in the United States, and the Eagle Ford, etc., etc. The reality there, there's a bit of a range in terms of the development cost per barrel, the break-even cost per barrel. But if you think of it at 60 as an average or a mean, that's probably about right. The spread is between sort of 55 and 65, which incidentally is kind of where I think oil prices are going to go. Except Paul has the window at 60 to 70. I'm lower than Paul. I don't think we will see a wholesale increase in demand, and I think the pressure on oil prices will return to being bearish as we come out of the back end of this. So the answer to your question, without referencing Halliburton share price, Sean, is that it's already started.
The outlook for that obviously has a big impact where this new supply, the decline in it. But Malia, one of the things that has declined quite significantly, at least the reports are, right, this rather dramatic moment in the context of the last month in China-US trade embargo, 100 plus tariffs resulted in essentially a COVID-like moment as the reference. Many analysts saying that it was the last month has been worse than COVID. There's literally no ship now crossing the Pacific to deliver goods from China to the US. There's endless things that the US consumer buys from China, consumer goods, etc. What damage has already been done here? How long does this will take to repair? If you take the what we've seen and announced over the last 24 hours out of Geneva, that somehow the worst is over between the US and China, how quick does this physically get fixed? I mean, what's the damage already done? How do you quantify that and its economic impact?
You're absolutely right, Sean. The damage has been done because China has a massive issue with, most of the companies, around 30 or 40% of them, they sort of rely on these cheap imports of plastics and containers, and they're going bankrupt. There was news reports or videos of 10 to 20 million Chinese people unemployed, shooting at factories, trying to get their wages paid. Now, let's just make something clear though. This pause is very interesting because I think both sides know they can't trust the other. Supply lines are changing for the good. Trade routes are going to be changing in the future. It may not happen overnight, but people are making better decisions in terms of how they want to be going forward. But let's not forget, we started this year with a very rosy forecast of 0% tariffs, and now we have higher tariffs, means demand's going to get hit. 30% is still 30% much worse off than companies can afford. So how are we trading at a market higher than where we were in February when the market has much more punitive damages to talk about? So yes, there is a demand hit. Small companies will be suffering. It does level the playing field in terms of flow starting again, but the numbers coming out of China and US in the next month, the macro data will be very, very bearish. We're going to see very high import prices. We'll see very low demand. And I think going back to the oil price, the question really is, does this resolve the demand problem? Because we know oil, there's a lot of supply. If we don't see a demand pickup in China or other parts of the world, this is where the oil price suffers. So yes, I think there's a marked shift in terms of the economy.
How do you, if you're the Fed now, right? How do you manage this equation? Because the shock to the US economy in some ways is still to happen. If you take this sort of tsunami analogy, when the water goes out, there's something nasty coming in, right? Yeah. And the water's gone out, right, with the breakdown in trade between China and but the tsunami's still to come ashore. The impact of this crazy month, if nothing else happens, is still got to come ashore. And with that, from a Fed point of view, can they move on rates with that uncertainty still lingering?
Sure, I have to say for the first time, the Fed did the right thing. Usually I'm not in their side, but I think they have no choice but to hold on. The hard data is still showing resilience. The labor market is tight and inflation is doing well, but it's still above that 2.2% level. So the Fed, it serves them to wait, because if we start seeing disastrous data right now, then yes, they can cut. They have the tools to cut. Their bar to cut is a lot lower than the bar to raise rates. But today, to preempt something will cause much more chaos in the system. If we start getting very inflationary data, do you think the Fed can cut right now? Unless the markets are down by 20% and there's a systemic collapse in the bond market, I think it pays for the Fed to wait, because the disconnect between the hard data and the soft data suggests the soft data may be too pessimistic, and the US economy is very resilient. You've seen the labor market, you've seen the companies, there's increasing capex. All the tech companies have actually not slashed capex, they've increased capex. So I think the Fed is doing the right thing, and we can pay to wait. How the data will come out the next few weeks will be very, very, very sort of concerning for the bond market, because there'll be very inflationary and very stagflationary. So I think we'll wait to see what happens.
Paul, you mentioned there the possible of the multiple reasons why OPEC Plus is increasing supply into what is whatever analysis, it's a demand weakening environment. You indicated a gift to the new US president, a lower gasoline price at the pump. Trump is coming to Saudi Arabia today. Is the gift now delivered? What do you expect from Trump's visit? Once he leaves, does the Saudis then reverse this idea of pumping into a weak demand? I mean, how do you connect those dots?
Well, I think the arrangement today more likely to be focused on two things, which is probably talking about some of the risk, the geopolitical risk in the region with Iran, with Israel. There'll certainly be a talking shop for that, and trying to certainly Saudi Arabia and the US want peace and want a deal, and maybe that's not going to happen at this visit, at this table, at this time, but certainly those will be talked about. But I think more importantly this time,
When you say a deal, are you talking about the Iran talks?
yeah, Iran and Israel, ceasefire and improving relation. Saudi Arabia wants improved relations across the region. It wants to present itself as a real key player, diplomat in the
You're starting
region.
to sound like one of those, beauty contests. I want world peace.
Yeah.
I mean, everybody wants that, but how do you get there? I mean, what has Trump delivered on any of these fronts ultimately, right? I mean, it's been a tumultuous month, more than that. And there's slaughter and famine in Gaza as compared to 6 months ago. I mean, everything is moving. I mean, there's bombs dropping all over Ukraine. There's a lot of noise about this real estate developer popping all over the world, not Trump, but his buddy, meeting everybody, but nothing's getting done. We're no closer, we're worse.
No, you're right, and like when Trump made promises about sorting out the Russia and Ukraine, and that still hasn't happened. It's unlikely to be happening. Most likely from this outcome is more about deals, about AI, about
It's about giving me a free plane. I mean, what's going on?
Yeah, it's an investment. It's more of this is going to be investment about switching from China, Saudi Arabia looking to do more deals with the US on AI and having that kind of thing. So it's more strategic in terms of oil. To be honest, I think there's going to be very little that's come out in terms of anything different, except stronger ties between Saudi Arabia and US. And just to add a point, what James mentioned, which he said his price was lower than I was saying from 60-70 for now. I think be careful of catching falling knives. I mean, we're in a situation like Malia has also said that demand could get much lower. We're still in China. There's still a lot of problems, trade war or not trade war. There's still massive problems in the demand scenario. And if there's not much demand there, then prices could go much lower over time. But we're still way away from a new equilibrium, away from 60-70, I think.
James, just sort of following up on the point there, the damage done, if we've seen the low watermark on this chaos, on the trade war, China, US, now going into a 3-month pause and supposedly going to try to figure out some of these massive challenges that have cracked their relationship. I don't know how they get around the biggest one that the Congress in the US has been obsessed with, which is ultimately, the intellectual property being stolen for years and decades. And how do you compete with that going forward? But my question to you, in terms of as a businessman, as an entrepreneur, as a leader of multiple businesses over time, what's the legacy impact here, do you think, on economic activity, on just pure business confidence to move forward with deals and investment and bank lending and all of the plumbing that makes the economies move forward?
Yeah, great question, Sean. Thank you. Look, businesses don't like instability. That's whether you're an oil major or an SME. They don't like instability. It's hard to work with instability. Whether that's in interest rates or whatever. I think Malaha made a very, very good comment, which is that what we're dealing with here are big, big global economic questions. It's very clear that the system, whether the system is the US system, whether it's the Europe system, whether it's the balance between trades across the world, the system was broken. And the reality is that whether you like Trump or not, what he has endeavored to do is put some really big rhinoceros heads in the middle of the room and call them out. And if you actually take a look at what's actually happening, I think Paul made this point ahead of the chat, is that the rest of the world is piggybacking on the back of some of those big, big decisions and reviewing their trade policies, who they trade with, who they're getting into business with. Now, in the long term, I genuinely believe this will bring around a much more stable balance in terms of global trade. I genuinely believe that, Sean. And therefore, I think in the long term, it will be good for businesses. In the short term, it's extraordinarily disruptive. But the US has to get on top of its debt deficit. Now,
yeah, but the reality is, on that point, a lot of this Trumpian activity, I mean, there's a lot of things to put in the space, but one of his biggest North Stars this year is the pathway to a major tax cut. That's his North Star. It's all the other stuff and locking up students and all sorts of reopening Alcatraz and these sort of distractions. But his North Star is tax cuts rollover that he did last time. He wants to do again. And that clearly is not fiscal responsibility with an economy with $36 trillion of debt.
Yeah, he will be focusing on those midterm elections in November. That's when he's looking to make any announcement about that's there. It all comes down to the maths, Sean. You know, as an engineer, it all comes down to the maths. You know, Jerome Powell, I think, is sitting doing the maths. He's looking at that debt deficit, but he's looking at the trends in inflation. In tariffs, you know, Trump is looking at the maths. Do the level of tariffs which I land on make a meaningful contribution to that debt deficit or not? As he's winding back, you know, it makes a difference, and you can see that in the April numbers, but it's not a huge difference. You know, the debt deficit moved by about $200 billion, you know, in the course of the last 12 months. So the reality is, what's happening is the world is being tipped upside down into what, as Paul said, a new norm, but it needs to find a new norm. You know, Sean, that's the key. Trump's leading the way with big announcements, coupled with distractions, you know, whilst he works out what to do next. But the rest of the world is reacting to that too. And you can see that in Europe, better than anywhere. Europe creating new trade relationships, you know, the effects of Brexit in the United Kingdom beginning to be unwound as they seek to have a very different relationship. The one which I thought was interesting, which we moved across, I think perhaps a little too quickly, is the Middle East's position in the middle of all of that. You know, clearly we've seen moves by Saudi in the last few months, and for Saudi, read also the United Arab Emirates, where they had been, I think, taking a very, very middle of the road position with regards to the business and trade that they did with the United States, and, you know, post Bush era with Asia. They had shifted their oil supplies towards Asia as the United States switched off as the shale basins came online. It is interesting to see them pivoting back a little bit towards the United States. And I think what we will see in the course of the coming week is some big announcements in the digital space.
Let's go to the survey question, because I do want to touch on that point. Survey question, which is where we started. Who won the US-China trade war? China, US, it's a draw, 1-1, go to penalties. Not over yet. Which of these do you think is the right answer for this moment? Malia, when you look forward from the point of view of the basics on the macro picture, the global economic health, the Asian demand picture, which ultimately underpins so much of the energy and commodity price sort of trajectory going forward. Does Asia look okay? Is it surviving this turmoil? Any worse, any better than others? The aftermath of a face-off between India and Pakistan seems to be moving through the system, but just generally Asia demand growth in this year in which all this turmoil is happening, your outlook for that?
I think the demand outlook is quite bleak. I think when you say Asia, we need to look at every single region specifically. But talking about China, I think they need to focus. They've had a very weak currency, and they've had their hands tied in terms of how much stimulus they could do to boost domestic consumption. China's main role right now is to really get the consumer spending growing, getting wage growth back, and that's their focus along with national security. Demand is still weak. They haven't managed to do that. And this tariff war of 30% is still hurting them quite a bit. So no, I'm not very positive about the demand outlook. It all boils down to central bank liquidity. I think banks around the world, especially the emerging markets, are cutting rates right now. So liquidity is picking up. But we're not in a situation where let's just buy every single risk asset because there's stimulus across the board. You know, the stronger dollar has been hurting a lot of companies in Q4. The weaker dollar this year would probably help them a little bit, but we're not out of the woods yet. And we talk about India or Pakistan, it's very region-specific stories in terms of demand. But no, in general, our demand indicators are not looking positive, and supply is an issue. We have a lot of big issues about sovereign debt that we need to solve about. And I think that's the market has no uncertainty. The bigger picture, you talked about Trump and the tax cuts. You're absolutely right. That'll be the bull case 1 year from now. How he gets there with the fiscal situation right now is the biggest hurdle, because he doesn't have the room to pass those cuts through. Then we have a massive debt bomb. And then by August, the Treasury is going to be basically hitting the debt ceiling again. So how do we get there? And the longer term for the tariffs is that once US gets these deals, getting jobs back to, the AI productivity boom will hopefully cause so much production at a lower wage cost, but that's a 10-year plan, right? So the ball's moving in the right direction, but near term, there's a lot of uncertainty and there's no growth right now.
Paul, I wanted to just pick up on that comment that James referenced there and tie it into that is the sort of Gulf's turn back west, turn back to the US, if you like, this promise of massive investment. And obviously it's very much in the news this week with Trump literally about to land in Riyadh. But my question, given the transactional nature of Trump and the America, how much at risk do you think, or how much on the table for Gulf decision makers is the security architecture that the US provides this corner of the world that has always been seen as a very strategic aspect of it for American interests? Now it's like my bodyguard's on $10 an hour and I got to pay him he wants a double pay rise. I mean, how much do you think the security architecture is a moment of awakening in all of this transactional Trump universe?
Well, I think, I don't know, security architecture, that sounds like I'm in management speak, Sean, to call you out.
Well, I mean, it's very simple. There's two aircraft carrier armadas that sit about 20 kilometers outside my window here. It's not a vague concept.
No, it's true, Sean. Like, basically, you're right. I mean, when you talk about the Strait of Hormuz or, the Red Sea, who guards that, who makes sure all the commodities that flow through that. 20% of global commodities flow through the Strait of Hormuz. You're right. And that's guarded by the US military. So it's hugely important, hugely strategic. And I think
if you're Arabia, do you have to put that on the table and think Trump will look at all of that as a transactional reality, and they have to be conscious of something that maybe they didn't have to be so transactionally conscious of before?
Yeah, and you're right. And he called them out before in the last time he was there through his Trump tweets. A lot of the time he was that he when prices got too high, that was what he intimated when back in his first term, that hold on, prices are too high. We're defending your region. You need to bring them down. And he got quite irritated back in that time. At this stage, he's probably coming a much happier bunny coming to the region this time, where prices are, maybe not everyone in the US, not US producers might not be happy, but certainly Trump and the US consumer would be happy where prices are at. And you think that Saudi Arabia is probably thinking, well, maybe this sort of level of price level works for us for now. We can suck it up. It's not where we want it to be, but if it chokes off non-OPEC supply, if demand is going to be weak anyway, we can mop up some of those barrels. Especially if China's going to be weak. If China's, if there is this deflationary spiral in China, if trade war hits China, we don't know how low China's going to go. Then those barrels, that guaranteed barrels for Saudi and the UAE, might not be as much, especially if we talk about the backdrop, the long-term view of China of moving away from oil as well, in terms of electric vehicles and everything. Maybe the long-term strategic plan for the Middle East is thinking, well, hold on, who's going to buy our crude? Maybe it won't be China in the same way in the long
plus
term.
When you think about it, also you're getting into that sort of future proofing of that a barrel, and that is chemicals, that's petrochemicals, that's technology, and that's very much also, they bought Covestro out of ADNOC, they bought Nova Chemicals in the, so it's very much a Western play that future proofing. James, sorry, last word to you, James. I wanted to get your thoughts on, as we Paul, did you want to make a last comment? Sorry, I cut you off.
No, I just going to say that it is about Saudi Arabia making sure it balances both parts of the region. You know,
Right.
Asia is very important, and the US.
Of course,
It needs to have what James mentioned, that point about diversification in terms of all energy and also in terms of all buyers, and that's what I wanted to mention. Thanks.
Yeah, James, just the last word on how do we, where we started, how do we, I mean, we sort of half joke in the sense, but not so much who won this trade war. It's obviously not over, but ultimately, as we sit in this middle of this 90 days now, or mid of May, the 90 days of the typical tariffs that started on April 3rd or 4th, whatever it was. What are the signals we take now from the UK? Did some kind of a deal, but I don't know really what it was. The China, US have said, okay, let's not jump off the cliff, but let's, you know, still smash each other. And some, like, how do you interpret where we're at halfway through this 90 days and now China's on a 90-day clock? Are we more optimistic, or do we still have this hangover and we're going to still be in uncertainty land, or we're at the beginning of the end? How do you read what we've seen so far with these so-called deals, and what does it tell us of where this is going?
Yeah, well, look, I mean, I'm a little bit more optimistic because, I mean, time has passed, and you know, what seemed to be ludicrous suggestions have been wound back from as people have kind of looked over the cliff. Look, I don't know who it was that said it. Might even have been Clinton. And it's about the economy, stupid. You know, that's what this is all about. It's about the economy, and it's about maths. You know, and working out where you go. You know, coming back to your Middle East point and looking west, it's incredibly important to remember that the shift towards the balance of looking east for the Middle East came about as a consequence of the US becoming virtually self-sufficient in terms of its hydrocarbon needs for its economy. And the reality is they're now looking over a ledge now where that isn't enough anymore. They've got to find, you know, they've got to live in a world, if the economy is going to grow, where inflation isn't a factor and that they are moving into a growth phase. That happens when oil prices are low, unless, of course, you are a big producer and your economy relies on that. That's when the math comes back into play again, because it's an equation. It is a volume produced times a price realized gives you your balance of payments. And that's why the big low-cost producers are beginning to put a mark in the sand that said, we can make this equation work come what may. And they're trying to work out the right levels of conversations to be having with both the West and the East. And we are finally getting to a place where we are perhaps beginning to find some of the answers to some of the right questions about the global broken economy. So I, for one, am a little bit more optimistic than I certainly was on April the 2nd.
Well, we'll close it out there because we've got a little over time, and we'll close. Oh, there's the results. Not over yet. China won. No votes for the U.S. The closing comment from one of the comments in the chat room. It's not about the economy, stupid. It's about cash. Trump will bust the U.S. economy to get the bribe cash to win the 26 midterms. That is, you know, and I think that's one of the interesting things that makes this visit to the region more challenging than usual, because you have a transactional president who's got both of his hands out saying, yeah, I've got my strategic government presidential responsibility hand that has a factor here and has been for the history of time. Since Roosevelt and King Saud met on the boat, but I've also got my own personal hand out, and both have to be full when I leave. James McCallum in Dubai, thank you so much. Paul Hicken in France, I think today, is it, Paul? And Malia Bengali in London. Thank you guys, as always. Three of the best of the business. Really appreciate your insights. Have a great rest of the week. Brent crude oil, little change today after a big bump up over the last 4 or 5 days on some optimism that China and the US are finding an end game. Certainly the equity markets are back to the drunken races, their favorite place.